Good morning, everyone, and welcome back to this new appointment with the morning briefing. Let's start right away for a second. Here we are, perfect. So let's do a recap as usual. Yesterday was essentially not particularly exciting. In short, volumes were low, even though the day was directional. In short, upwards with some good bearish swings as well. Essentially, an interlocutory day that did not add anything new to what we knew and to what, in short, we have been experiencing in recent days. So we need to get used to navigating by sight during this period, as I have said many times. That said, from a macro perspective, there are no significant data releases today, except for the usual weekly oil inventory data. That, in short, is the most relevant one, but essentially there are no significant macro data at the moment. We start with the Nasdaq from an operational point of view. We are working within the range of the BC3 levels, close to the HV level. So essentially in a range day from yesterday's close, we are essentially working between RD0 and SD0 throughout the morning. I do not rule out possible moves towards SD1, where we have this nice pair of BC3 levels. In short, the SD1 level, so this will certainly be an important support area, obviously on the upside, a break of yesterday's highs. Area 5.30, 540 thus corresponds to a tendency of R and 0, could lead to broader upward movements. We can also look at it perhaps on a larger time frame. Here, this is an hourly chart, so 1 hour. We are exactly here, so the area to pass is this one of these highs here, because once these highs are broken, obviously one could clearly aim for the 21,000, 21,100 area, but obviously this is the obstacle. So the area between RD1 and RD2 is essentially the difficult one to pass. So once RD0 is broken, the problem will be this one here, and it is the one to monitor for a potential continuation break of this upward recovery that is taking shape quite substantially, even though, as we can see, it is not accompanied by volumes. Excessive. The decline was much more, in short, the decline was much more accompanied by volumes compared to this rebound, which is why I am still quite cautious and expect, as I said, probably new aggression from sellers, likely in this area here, in the 21,000 area for the Nasdaq, and then we'll also see for the S&P around 58,050 or 58 on 80, which I have pointed out several times in recent days, so pay attention to these areas. Perfect. Having said that, for the Nasdaq, here we are right at S. Let's immediately look at it on the charts. Hourly. Here it is, the area to pass. These lows here that then correspond to these highs here. So this entire zone here, which then corresponds to here, between RD18 and the VIX area, is the difficult one to pass. Here is the first obstacle, RD0 and RD1. The first obstacle that corresponds to this area here, however. This one might probably pass, but then I see the real obstacle, this area here at 70, at 90, this area here. As for the Nasdaq, in short, it's where I expect the reappearance of sellers, but already starting from this level, 50, 50, 58, 50 and 55, 8, 60. It will certainly be a level where we will see the appearance of sellers, in my opinion. Perfect. Having said this for them, in short, the moment, the situation. As for the details, we are also working here within the range of PC train levels, a fairly defined range between 58 and 36, and precisely this area of the two PC levels, 3, 5, 8, and 10. So probably, in short, until the opening, we will navigate in this range. In short, to be monitored. In short, I repeat, these are the areas I have just finished dimensioning. Let's move on to the other futures we follow. Perfect. Let's start again with the Dow Jones. Similar situation. Nice, well-defined range within levels BC3. Everything is well-defined. We are working below.
Below the RD0 level. There must be some mistake. Wait. I did. Hold on, let's see. Just a second. I want to make sure I didn't make mistakes in this string.
Okay, there are no errors. Perfect. Okay, as we were saying, we are working at the level of the levels within levels BC3, right near HV, logo just below. In the same way, the area to monitor. I think it's even unnecessary to have to say this. In short, we have a defined ring RD1. SD1, these are the limits of this range that we can work within, as long as the price remains within this. We move to Russell. We are working below the BC3 levels at the moment, but essentially even here the range seems well defined to me. And in short, the area to monitor is obviously 226, 25, 34, the upside, and the 200, 205 area for the downside. In short, it seems like there's a bit of a pullback here, but as you can see, the volumes are quite low, typical of the night for this instrument. So it's a range to monitor at this moment. Is here delimited between RD1 Pro and SD0. We can basically say, with some touches, even at SD1, because then we have this candle here, which is more or less in the SD1 area. So these are the areas to monitor for the Russell. Perfect. Let's move on to, let's take a look at the DAX, which had recovered a little but continues to struggle a bit. Yes, well, these dynamics that we have described multiple times. The market has been open for 15 minutes. So, are you going? Well, during the night it had recovered RD1, but now it's aiming, it has tested 5.3. For this level here, where the price is right now, it could also break these levels. PC3. Well, probably testing SD1 because I see good volumes coming in. The good pressure continues to push downwards. Probably a low point will be reached. We'll see. Well, many follow this, but it's one of the signals we follow. So, well, and I always make a few notes, as we were saying, Brigitte, about the oil. Here it is. We are working right within the BC3 levels, above today's HV level. Yesterday, well, it reached 69, 60. Well, let's take a look also at an hourly chart, maybe so to get a broader view. Okay, no, well, we have witnessed a nice drop, well, from the highs here in the area. Around 80, not of the descent. Now, well, we can comfortably, well, it's a rebound. Obviously, the tough obstacle is this 70 and 50, 71 is the area to monitor. A break of this area, obviously, could easily bring prices even to the 73 area. This easily. We will see, well, we know the dynamics that this instrument experiences. So at the moment, well, the recovery seems rather, well, if you apply the uncalling reg, it will probably, well, signal it to you. Well, I haven't loaded it, but if you go and do it for those who follow it, it can certainly give you some indication of how the volume dynamics are at the moment on this recovery. Let's also look at them, of course. This is also an hourly chart. We are not essentially since Friday, when it made this nice big candle at the opening, which brought prices from 35 to 30, 44, 30, 50, 30, 50. Excuse me, in the 3000 area. But since then, well, we are working within this manner that is defining this trading range, which is narrowing a bit. So, well, I probably expect then a breakout in one of the two directions. Well, I can't say which one yet, obviously. Well, I don't have this divinatory power. As I always tell you, what I do is limit myself to looking at what I have in front of me. So pay attention to these levels. So 30, 30, 53 to 3.010. Well, roughly speaking, this is the range. Well, that can be worked on globally regarding our analysis. I also wanted to take a look at X and PX, okay, still on this well-known 4-hour chart that I haven't moved. At the moment, we have recovered, so to speak, the upward trend, probably a test of this area here, 5.8 and 35.40, this area. Here, a test of this area. Here I expect it, which then, in short, corresponds to the area we also indicated for the future, around of the Standard & Poor's. So where do I expect? Then the reappearance of sellers, in short. So pay attention to this area here for those who trade SPX. Perfect. With this, I believe I have reached the end. I don't think I have forgotten anything to say. As always, we'll catch up later in the chat. Thank you all for your attention.